Now, growth in China's investment and factory output for August has come in below forecasts. It's triggered fears the world's second largest economy is losing steam and may cause more falls in major investment markets. Well, let's speak to the journalist Chao Deng, who's with us live from Hong Kong. Thanks for joining us, Chao Deng. So what is behind this fall?
So over the weekend, as you mentioned, the official data showed that China's factory output was weaker than expected in August, and also fixed asset investment was also weaker than expected. So this morning, we're seeing the market slightly weaker. But, in big contrast to what happened in August when we had a huge global sell-off, some of the worries about China appear to be easing when it comes at least to the volatility in the stock market. So last week in Shanghai, we saw shares rise for the first time in weeks, and it seemed as if some of the rhetoric coming out from Beijing and also the government's continued measures to help prop up the market seemed to be working a little bit.
Okay, so what will be the implication for the regional economies and indeed the global economy too?
The region's markets are picking up as China volatility subsides. Today, you see the markets off a bit again because people are actually focusing more attention on this U.S. Federal Reserve meeting that's coming up on Thursday. In terms of the economy, obviously a slowdown in China has big ramifications. For example, Japan stocks have seen quite a bit of volatility lately as people are still worried about the China economy and how that will pressure Japanese exports going into China.
So to what extent is there a concern that this is at the beginning of worse things relating to the economies?
We'll have to see how the Chinese economic data holds up in the rest of the year. So far, it's showed continued weakness. We'll have to see how, what the U.S. Central Bank says about its interest rate decision possibly this month or later this year. And that actually may give investors some indication as to what they think is going on with the global economy. There was some expectation that if U.S. Federal Reserve officials think that the global economy is weak and that markets are still too turbulent, that they will actually hold off on raising interest rates this month. So that decision coming this Thursday could, give investors actually a pretty good reading on what's going on with the global economy.
Okay, Chao Deng, it's ever good to talk to you on World News.